What's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades they could have taken today with the system. So if you guys remember from yesterday, I told you guys since we're around this 30-minute 50, you can't really be bullish, and I would favor downside. And look at this right at open, man. Perfect tap of this 30-minute 50 here. As you guys know, the market is neutral, or was neutral right here, still is. If we look on the other side of the premium real quick, on the put side, 10's below the 50 here on the Friday puts, so that means we're neutral there. And if you look over on the call side, same thing, 10 is below the 50, so it means there's no trend in the market and that we're neutral. So in this context, what do we look for? Well, a trade that you could take is these 50 rejects. The 50 SMA here on the 30-minute chart is a major resistance area. So since these are on calls, obviously you could short these 50 SMA taps. So when you go to the 0-day chart, right off of open, we opened all the way down here, and we got this move up to the 5-minute 50, which, I mean, you could have shorted. Since the 5-minute and the 30-minute were at that 50, you probably would have gotten stopped out. I took an entry on this actually once this got back below the 50. So we got back below the 50 on this candle, and I went short because most likely this wasn't going to go and cross. If you wanted a safer entry, maybe wait for like an initial rejection off of it, but it was an aggressive 5-minute candle that happened. So that ended up pushing us up into that 30-minute 50. Calls never ended up crossing here, so this wasn't a trade I would have taken anyway since we're at that 30-minute 50. What I did, went short once this 5-minute candle got back under the 50, went short, and boom, there's the move that it gave. I think that from top to bottom, this gave like, I think 300 points just about. If you entered right on the 5-minute open of this candle, there was about a 275 point drop from this 50. We ended up bottoming out right at the 0-day 50 here on the put side. So once we came up into this area, I wouldn't be in short at all, because this is a major pivot point on the intraday chart. So you would have sold all of your short right here, but I mean at this point you should already be out of that trade, just because we did get a nice reaction. If you held runners, that would have been your spot to take everything all off at. But yeah, I mean, other than that, there really wasn't anything else. If you look on the call side real quick, we did get this like cross kind of in a close that worked, but I don't like taking these types of setups after 3 o'clock because a lot of times they don't work out. So just to run you through it, if this was a trade earlier in the day, but 10 went above the 50 right here. There is no entry up until this point right in here. Why? Because this 50 SMA here is still sloped down this entire time, never curled up. So like once this initial cross happened, you are not in a trade or buying this dip right here. You just gotta, I see a lot of people that just don't follow the system the right way. I mean, we did cross, okay, but you have to wait for this 50 SMA to curl up to take an entry. So your entry would have been down in here somewhere, stop below the 50, and that would have worked out right there. We did reclaim the 10, which, I mean, maybe you could have taken a low risk entry there if you didn't, if you were, not in the trade. But yeah, this left side of the chart right here, there is no entry point. There is no reason to be in a trade at that point. It's all about taking the right trades with the system and knowing when to enter. This 50 SMA tells you when to enter. There's no entry, no entry, no entry, no entry, no entry up until this point right here. The 50 curled, that's your entry point in the move we got. So, I stay out of it. I stay away from the trades after 3. But yeah, I mean, that did give a good move. I'm not sure how many points, probably like 50, 60 points, 70 maybe. And then going into tomorrow, I know we have, I think, Apple right now earnings. So that probably is going to be a deciding factor of what happens. But like right now, this is what the charts look like. We're neutral. I mean, 10's below the 50 here, and then if you look over on, no, that's the wrong chart actually. We're gonna be getting new contracts tomorrow. I forgot about that. We're gonna be getting new contracts tomorrow. So if we go pull them up, it's gonna be the 610s, I think, most likely, unless there's a big move overnight. But if we look at the 610s real quick, it is trying to cross right here. Chart is super funky. Like right now, I'd say we're still neutral. I can't really call this a cross at the moment because we have Apple and it's pretty funky looking. So I'll just give you guys scenarios. I mean, 30-minute crosses tomorrow and we're bullish. Focus will be on the longs. Obviously, if this doesn't work out and we gap down or something like that, then the market obviously neutral. You're gonna be looking for a 0 DT cross either side of the premiums. And then if we go pull up the put chart real quick, the 600 puts, wherever those are at, 600 puts. You can see we end up hitting this today pretty much, but yeah, again, this 30-minute 50 major pivot point. So if a put cross does happen in this area, probably won't take it unless the 50 is flat. But if it's like sloped down, won't be taking any put cross that's near the 50. Same goes with the call side 50. If for some reason we pop back up to it tomorrow, after like a gap down. But yeah, I mean, it's pretty simple. Neutral market, 0-day cross, either side of the premium, negative cross, either side of the premium. The 0-day cross though on either side of the premium only is valid if we're not at the 30-minute 50. Like today, like off of open, that's a trade. If that chart did cross on the 5-minute off of open here, if we go real quick, 605s, if this ended up crossing right here off of open, I would have not taken that trade. Why? Because we're at the 30-minute 50. It's just not a good trade you want to take. Sometimes it'll work, sometimes it won't, but that's just not a high conviction setup for me, so I'd rather sit out of that. Especially with how the 50 was, it was sloped down quite a bit, so I did favor that rejecting. But yeah, I mean, that's pretty much the trades you could take tomorrow, and that's the plan. No real strong bias with earnings after hours and things like that. So we just gotta play the 0-day charts tomorrow, see what happens, and just see how we open up tomorrow and take any trades. So if you guys enjoyed, drop a sub. If you want to learn, join the core down below. But I'm out. Peace.